baby. Morad, Fiki, how's it going? So, I'm so excited, having a great time right here in Explosive Growth. This is my signature program where I can teach fix and flip investment strategy, real estate investment strategy. We're going to go deep. We're going to discuss all kinds of different ways to invest in real estate and Greater Houston, Texas real estate. And in fact, if you don't have real estate investment as a part of your investment strategy in your portfolio, that is a huge mistake. It's a huge mistake. It is a great way, at a minimum, to diversify your portfolio. Everybody's got 401ks, IRAs, savings accounts, stocks and bonds, different piece of paper asset. It's a piece of paper. And I'm not saying you shouldn't be invested in the stock market. I'm not saying you shouldn't be invested in 401k. You know what? If you have a 401k and you're putting money away every single paycheck where you don't even see it, that is awesome. You're doing way better than the majority of the world who spends every single penny they earn. So saving and having something that you can look to in the future is a great idea. I'm not saying don't have a 401k, and I'm not saying don't invest in stocks and bonds. I have stocks and bonds, but those are paper assets, meaning these companies can make one bad decision and that piece of paper vaporizes. It is gone. Okay? And we've seen this happen with different companies that have been incredible companies. We've seen what happened to Enron. We've seen what happened to what was that mortgage company that got evaporated during the financial crisis? I forgot the name. It slipped my tongue. I think Bank of America bought them out. We've seen it happen to a ton of companies that were sound investments, and then boom, that investment vaporized right between thin air, vanish. So a great way for you and I to diversify your investments is put it into hard assets, real estate, something that I can go touch. And there are so many reasons why real estate is a great investment. Over the last 2,000 years, real estate has been probably the most sound investment. When stocks and bonds didn't even exist, when these tech companies didn't even exist, real estate was there. People will always need a place to stay, sleep, raise your families, and have something that you can come home to at night where you can lie and rest. So real estate is a great investment. And by the way, can real estate just be vaporized overnight? Well, what would have to happen for that to occur? There would have to be a catastrophic event, a catastrophe, a hurricane, a huge storm, maybe Hurricane Harvey, a flood, a fire. Those things can happen, but you know what? There's insurance that protects for that. So when and if the real estate investment catastrophe happens and the asset is crushed or it goes up in flames, that can happen. There's insurance for that. So you've got your risks padded and your risks mitigated. And so that's great. We're going to discuss some of the fix and flip investment strategies today. We're going to discuss how these investments can literally, one deal, you can make what you made the entire year, the entire month, the entire 6 months. You can make in one deal. And that's what I call a quantum leap. When we're looking for ways to improve our life and improve our family's life, I want to do a quantum leap. I want something that propels me years down the road. And now this is not a get rich quick scheme. This is a get rich for sure plan. But you got to know what you're doing and you got to make a sound investment decision, right? So we're going to go over all of that. We're going to take questions and we're going to have a great time. So thank you for joining me. I appreciate you. And let's dig in right now. Let's dig into my slides right now. So I'm going to share my screen with you. Hope you're having a wonderful Tuesday, February 22nd. And here we go. So hope everyone could see that. All right, explosive growth 5-day challenge. Let me just make sure that okay, there we go. 5-day challenge, explosive growth. We're gonna dig in. We start with my disclaimer. I'm not a financial advisor. I'm not an attorney. I'm not a CPA. I'm a licensed real estate agent and a real estate investor, and I've been a proud real estate investor. We're going to discuss my own personal results and experiences. I cannot in any way, shape, or form guarantee any results for you or your investment strategy. There's many external and internal factors involved. And whether you decide to invest or become a real estate investor, this is a personal choice that you must decide for yourself, and you make your own risk. All investment decisions have risk. All investments have risk, and anybody who says otherwise is probably lying. If there's no risk involved, it's not likely that that's an investment. Real estate investing is risky. Should you decide to invest, do so at your own risk. Today's word of the day, we will discuss motivation. Motivation is the reason or reasons one has for acting or behaving in a particular way, the general desire or willingness of someone to do something, to keep staff up to date, maintain interest and motivation. What is motivation? What is your big why? What is your why? Why? Why should you take risk? Why should you improve your life? Why should you do any kind of investing? Real estate investing or any investing? Why? Why? What is your big why? And I'll tell you, and I'm going to talk to you about my why. My big why is my family, right? We just recently had a baby girl. Through the graces of God, we had a healthy baby girl, and I'm excited because we've got 3 boys, and having a girl, it just adds some new flavor to the family. But now I've got 4 kids that I've got to feed, clothe, provide for, be a role model for. I want to provide our next generation and my children with opportunities that I did not have growing up. I didn't come from a wealthy family. I didn't come with a silver spoon in my mouth and a trust fund. And if you did, that's great. I'm not saying anything against that. But what I am saying is that anybody can start investing in real estate and become super successful. You don't have to be uber genius. You don't have to score the highest score on the SATs. You don't have to have an above average IQ. But you got to be passionate, you got to be dedicated, and you got to be determined, and you got to commit. There is no such thing as a get-rich-quick scam. And that's why everybody who tries these get-rich-quick scams, and then they often never work out. I've never seen a get-rich-quick scam work out. Ever. Pyramid scheme, get-rich-quick scam, get-rich-quick scheme. It's just a hoax. And somebody telling you need to pay them to show you some get-rich-quick scam is a hoax. The truth is in the commitment, the determination, the dedication, and the perseverance to do whatever it takes to make it happen. And that is what I have been dedicated to. Whatever it takes, I'm going to make it happen. Why? Because I have a big why, and that's my family, my children. I want to provide a life for my family that I didn't have growing up. And you can do the same, and anyone can do the same. And that's what I want to champion on you today. So getting back to your why, you have to connect with a big why. It's got to be bigger than, oh, I just want to get rich. Why do you want to get rich? There's nothing wrong with getting rich. You should get rich. Shoot, this is America. This is the land of the free, home of the brave. This is opportunity. This is not a communist country, communist society. This means you can do whatever you want, whatever you choose, and anybody anywhere in the spectrum can get as high as they want to, if you choose to. So, but it's got to be deeper than that. So why do you want to make money? Why do you want to get rich? Why do you want to be successful? All my life, I've wanted to be successful. And why is that? Because I believe I wanted to go against the grain and prove all the naysayers wrong. To me, that meant a lot. Prove all the naysayers wrong. And they will never stop me from being successful. I can achieve greatness, and you have greatness within you too. And so that's the big why, but you got to tap into your why. Why do you want to achieve greatness? Because you have greatness within you. Let's keep going before I start going really deep. Shoot. All right. So today, day 2, we're, I'm having such a great time doing this. We're going to discuss the fix and flip investment strategy. We're going to discuss sourcing deals. There's a particular formula. When I'm looking at a deal, I'm looking for a specific formula. We're going to discuss that. We're going to discuss sourcing deals. We're going to discuss financing the deal. Somebody might say, oh, I got a deal. I don't get excited until I see how you're going to fund the deal. And I'm going to tell you what, if you really have a deal, the money will fall on your face. You will find the funds to do a deal. If it is a great deal, you will find the fund. The funds will find you. There is more money than deals. I'll tell you that. Hiring the right contractor. Hiring the right contractor can make or break your deal. Paying your contractor on a schedule, making sure that the job is progressing. We'll discuss that. Joint ventures, JVs, partnerships. When should you partner? What would be a great instance to partner with someone on a deal? Fix and flip versus buy and hold. What is the investment strategy? What is the exit strategy? There are so many exit strategies. We'll discuss those. We'll discuss. Okay, so yeah. So fix and flip investment strategy. Let's get right into it. So the formula that I'm looking at when I'm looking at a deal is 70% of the ARV. That is the after repair value. That means after we fix this house up, what is it worth? Not what is it worth today. If the house is falling down and it's in bad shape, it's not worth as much as if we fix it up and make it look absolutely incredible. So what is the house worth after we fix it up? That's the after repair value. So I'm going to take 70% of that value. I'm going to deduct the cost of repairs. What is it going to cost for me to bring the house up to par? So if I can spend $20,000 or $30,000 and I get $50,000 or $75,000 in value, that is a great deal right there, because I'm spending, for every dollar I spend, I'm getting $2 in value. And that's what I'm looking for. So if we take 70% of the ARV, the after repair value, less the cost of repairs, we get the maximum allowable offer. That is the MAO, the maximum allowable offer. That is really the maximum that I can pay for it, because I need the house to be worth more than I'm investing into it. And we'll also discuss, there's a lot of costs that are gonna on your way out. When you sell the property, you've got closing costs, you've got broker commissions, you've got title insurance, you have interest on the hard money loans, which we'll get into all of that. So quick example, keep numbers short, easy, and just easy to look at. If I have a $200,000 house and that's the after repair value, not what is it worth today, but if it's worth $200,000 after I repair it, then I'm going to take 70% of that. That's going to be $140,000. That is my 70% times the ARV formula. The cost of repairs is $37,500, for instance. How do I find the cost of repairs, by the way? I find the cost of repairs by bringing a contractor who's ready, willing, and able, and competent, and honest. I don't want a contractor who's going to give me some lowball numbers to get the job, and then after they're hired, they're going to say, oh, by the way, I got to fix this, I got to fix that. Oh, you know what? I didn't even see how much, I didn't even notice how much I needed to add to the repairs. I didn't even see these other repairs. And that's not being very honest. I need this number to be fairly accurate. Now, I may have a plus or minus 5% contingency, but I need to be sure that it's pretty close to that. So if the cost of repairs is 37.5, we deduct that from my 70% formula. So my MAO, my maximum allowable offer, is 102,500. Now, can I go a little bit higher? You could. That, you know, the ARV of 200,000, we want that to be conservative. So maybe I can get 205. Maybe I can get 210. But we want to base it on a reasonable number. So if we're looking at the ARV, we have to look at the best case scenario, the worst case scenario, and the most likely scenario. You know, that's how we got to look at the strategy. And we got to look at, what if everything goes south? What if the worst possible scenario happens? Can I still exit this deal and make money? And yes, you got to make money even in the worst case scenario. Maybe you didn't make as much, but you've got to be able to make money in all three scenarios for it to be worth your while. You can't be doing deals and they go south and then you're losing money, because that's a very fast way to exit this business. So digging right in, sourcing deals. How do we find deals? Let's go back to this real quick. Let me just take a pause. Let's see if we have any questions. All right, we got somebody saying anybody can invest in real estate even without a lot of money in savings. Absolutely. And it really depends on the deal. That's a great question. Can anybody invest in real estate even without a lot of money? You can absolutely invest in, and there's also no money down investment strategies, which is wholesaling. You know, there's a lot of investors, and the way they get started, if they're really good at finding deals and sourcing deals, they wholesale the deal. So even if you get a hard money loan, a hard money lender is going to want you to have some skin in the game. They're going to want you to put 10% down. So if you have a small deal, $100,000 deal, you know, 10% of that is $10,000. Maybe you have $10,000 you can invest. And if you don't, you know, you can partner with somebody who has the money. They fund the deal. You brought the deal and y'all are partners. Or you can wholesale the deal. You can sell that interest. You can sell that contract that you found. You have this property under contract. You can sell it to another investor who's going to take it to the finish line. And you could take a small fee for that. Now, you got to leave enough meat on the bones to make it worth their while. If they're bringing the cash, the credit, the money to do the deal, and they're going to close, they're going to step in your shoes and actually close on the deal, you got to leave enough meat on the bones to make it worth their while. But you can take a small piece of that, a fee for finding the deal, and you wholesale it and you move on. You're basically taking the contract, you're handing it to someone who's going to do the deal, and you take a fee, and that's perfectly fine. What I don't like to see with wholesalers that don't have money is when they lie to sellers. When they get a property under contract, they say, I will absolutely close on this deal. And if they don't find a buyer, then they walk away from it in 3 months. And I see that happen with a bunch of rookies. And that's just a sham. Don't leave people high and dry. If you promise somebody you're going to close on that property, then close on it, whether or not you find a buyer. And I've done that. I've put properties under contract, and I've said, look, maybe I don't want to do this deal. I'm pretty busy right now. I'm going to see if I can sell my interest in purchasing this property. But if I can't, I'm going to buy that property. I'm going to close on it, and then I'll deal with it after the fact. Don't leave somebody high and dry. But a great question. There's a lot of different strategies that you can get involved in real estate even without money or with little money. It really depends. If you're new to real estate investing, don't be looking for multi-million-dollar deals. I mean, let's get your feet wet. Let's do the $150,000 deals, which, by the way, those are the deals that you can make mistakes on and the market will forgive you. The $1 million deals are very sophisticated buyers. And you don't want to try to make mistakes on those. You want to make mistakes on the small houses, and then you get better and you move up to the bigger deals. But great question. Thank you for that. So let's keep on going. All right. And yeah, so we already discussed this. The formula, 70% of the ARV less the cost of repairs. So sourcing deals, how do you find deals? There are so many ways to source deals. Let me get a quick drink real quick. All right, there's many ways to source deals, and we'll discuss some of those. There's the foreclosure list. There's the first Tuesday of every month is the foreclosure day, where every county in Texas has the foreclosure sale. That includes tax foreclosures, HOA foreclosures, and bank foreclosures. So foreclosure deals happen the first Tuesday of every month. So we have the tax foreclosures, the foreclosure list. We have the probate list. Now, real quick, before we move off of that, now, can you go to the foreclosure, the tax and the bank foreclosure at the courthouse steps the first Tuesday of every month? Can you go and find deals there? You can. But I will say this, I really don't want to go bid against the entire market. Why? Because there are people who, if they get 5-cent discount on houses, if they get a 5% discount, if they're buying houses 95 cents on the dollar, they are elated. And I don't really want to bid against those buyers. I don't want to bid against the people who just they have all this cash burning a hole in their pocket and they need to put it into some houses. And if they get a 5% discount, they're elated. I'm not trying to bid against them. So those are places you can get deals, but again, you got to stick to the formula. So the best way is finding these deals, but before the foreclosure sale, finding it, making contact with the owner, and then doing something called a reinstatement, where you get a hold of the bank, you buy that property from them, you can reinstate the loan and possibly take this house off of their hands while you reinstate their loan, and you bring their loan current and you begin making payments. And that's a strategy called purchasing a property subject to the existing financing remaining in place, which we can discuss that later. There's the probate list. There's probate deals. Driving for dollars. Every neighborhood in Texas and across the United States and probably around the world has rundown properties that have been abandoned, that people have inherited, that they don't even know they inherited, that they don't even know what they need to do with this property. And if you can make contact with the owner or the heirs, in cases where the owners passed away, you can make contact with them. You can take these properties off their hands at a great price where it makes sense for you. And they are just ecstatic that you did this for them, because they don't know what to do with the property and they don't want to deal with it. And in fact, they're often in other states or even countries, and they don't want to deal with this property they inherited. Now they got to pay taxes on. So that's called driving for dollars, where you find properties, you skip trace them. That's another word for locating the owners or the heirs. You get a hold of them and you can get some great deals on properties. And you know what? You're improving the communities while you're doing this. This is why real estate investment is such a great win-win-win, not only for yourself and your family and also for the owners or the heirs, but also for the community at large. You're improving properties that are often eyesores, that are abandoned, that people just squat on these properties. You can improve them and just make the community absolutely beautiful. And also, a lot of these properties, no one's paying taxes on them. So now you're bringing the tax revenues back to the state, back to the counties, and back to the school districts. So this is just a win-win-win-win scenario. Tear downs, abandoned homes. Again, that's what I was talking about, rundown homes and just abandoned properties. MLS listings, 90 plus days that have been active on the market. These are maybe, owners are ready to start making deals on these properties. If it's been on the market, especially in this hot market, this uber hot market, if these properties have been sitting on the market over 90 days without knowing anything else about that property, without analyzing all the numbers or what is it worth or what does it need, I know one thing, it's overpriced. If it's on the market over 90 days, it is overpriced. So without knowing anything else, it is not listed for the correct price. And those are possibly deals that can be made. Wholesalers have deals. Be very cautious of wholesalers. Be sure you know the wholesalers and they have a great reputation. There's some great wholesalers out there that I do business with, and there's some terrible wannabe wholesalers out there that you should not do business with. So be very cautious. I'll preempt that. So let's see if we have, before we move on, let's see if we have any questions on any of those. Yes, it is a public service. It is a public service. You know, there's some properties. I got a property under contract a while back, and it was going to the tax foreclosure. This property was going to the tax foreclosure. Let me pull this off real quick. So I had a deal a while back that was going to the tax foreclosure, and I made contact with the heir, the sole heir that inherited this from the tax foreclosure. And he didn't know what to do with it. No one had paid taxes on this house for about 7 or 8 years. So the Harris County was foreclosing on it. And I made contact. I brought all those property taxes current and I purchased it. I turned around. I owned the house for 1 day. I turned around, sold it to someone else who was interested in buying it, someone I do business with. And I made a significant profit because I found that property in 1 day. I didn't have to do any of the work. I didn't want to do the work on it. It was not an area that I'm personally investing in for the long term. I didn't want anything. But now I helped the heir. He was going to lose it. So I was able to bring up the property taxes current, helped him out, helped out the county that has not collected taxes on this property for years, literally years, brought the taxes current, paid all the penalties, interest, legal fees, all of that. And now that revenue comes back to the state of Texas. The school district gets that revenue. The state gets that revenue. So this is a win-win-win, and I got a profit for me and my family. Wasn't that great? So that's just one instance. Let's go to the next question. Why should I watch out for wholesalers? What could go wrong? Wow, so many things can go wrong. You know, wholesalers, do they even have the property under contract? Some wholesalers don't know what they're doing. They don't even have, if they don't even have the property under contract, they can't sell you a contract they don't earn, they don't own. If they don't have the right, the equitable right to purchase that property, then, you know, they're making a mess. You know, be very cautious. So I would never give a wholesaler money in their hand. I would make sure you go through the title company. Title companies are regulated by the Texas Department of Insurance. And in every other state, I'm sure they're also regulated by their state's authority in that matter. And so title companies have a responsibility to do right by you and by the public. So I would definitely go through a title company. And so those are just some of the things you need to watch out for. All right, so let's get right back in. Let me pull this up. Okay. Let's discuss financing the deal. Oh my gosh, there's so many ways to finance the deal. How can you finance the real estate transaction? There's so many ways. There's hard money lenders. What is a hard money lender? A hard money lender is someone who really doesn't care about your credit. I was going to say your cash, but they do want you to put a little bit of skin in the game. Why? Because if they give you 100% financing, then it's so easy for the deal to go south and you just say, you know what? Like, screw it. I'm just walking away. So they want you to have some money in the game, money in the deal, and generally they will fund 90% of your purchase price. So they want you to put 10% down. And that way they know, hey, you're going to lose too. Okay, if you walk away, but you lose 10% of equity that you have in that deal. And so hard money lenders, a great way that you can see whether or not you have a deal is let some hard money lenders look at it. These guys are looking at 300 to 500 deals per month, especially the big hard money lenders that I know. And you know, I'll be happy to refer some hard money lenders, but we're not going to do that publicly because I'm not going to give free advertising. hard money lenders will let you contact me, and we'll see if I'm going to screen you first and make sure you actually know what you're doing. But I know a bunch of great hard money lenders that look at a ton of deals. And if they don't want to lend you on a deal, guess what? You probably don't have a deal. So that's a great way to see if whether or not you have a deal. Hard money lenders. Private lenders. There's a ton of private lenders. There are solo 401ks. There are self-directed IRAs. A great company here in Houston that is called Quest IRA, where you can have a self-directed IRA, meaning you can have a retirement account that invests in real estate. And so you got private lenders and self-directed lenders who need to invest their funds and lend and get a great rate of return on real estate hard assets. You got bank line of credit. You can get a line of credit for real estate investing. You can get a home equity line of credit, where, you can take the equity from your home and invest in real estate. Now, somebody might say, hey, that's risky. I'm not saying get a home equity line of credit and go buy a bunch of flat screen TVs, right? I'm not saying go get a home equity line of credit and go buy a taco truck. I'm not saying that the taco truck might not be a great business, or, if that's what you want to do. We are talking about real estate investing and purchasing assets that are going to give you an ROI, a return on your investment. That's what I'm talking about. I'm talking about making an investment, using the equity in your home to make an investment that can double your money in the next 90 days. That's what I'm talking about. So I'm not talking about flat screen TVs or a waste of legitimate investment. So home equity line of credit is a great way to tap funds. Sub 2 financing, subject to. What if you could go into a property that is about to get foreclosed because somebody hasn't been making payments on the loan? You come in as the investor, you take this property off their hands, you reinstate the loan. What does that mean? That means I'm going to reinstate this loan. I'm going to pay it, all these past due payments. I'm going to bring them current. All of the debt, the interest, the legal fees, all of their penalties and interest, I'm going to bring it current, and they're going to reinstate the loan. And now I'm going to start making payments on that loan. Now, why would somebody want you to do that? Because number one, it's going to foreclosure. And if that gets foreclosed, that is going to just be a nuclear bomb on their credit. I'm stopping the foreclosure. I'm going to bring that loan current. Now the credit is going to show this loan that hasn't been paid on for months is going to be current again. And now I'm making payments again. Isn't that great? That is great, because you want to show the credit reporting agencies that the loan is current and you're making payments. Their credit will go from the dumps to vastly improving. Meanwhile, that gives me time to do my renovations, and at liquidation, when I resell the deal, that loan will be paid off. That helps me and that helps you. Again, you need some cash because you need to reinstate the loan, but I don't have to go find a loan. There's already a loan on this house. Now, there is a due on sale clause. Can the bank call the loan due on sale because somebody sold you the property? Yeah, they can. Of course they can. So you better be ready to have a hard money lender in the back pocket if you need to. But the chances are within 90 days, they're not going to call that loan due. I can bring the loan current. I can start making payments. I can improve your credit by doing that. And I can stop the foreclosure. That is awesome. And that buys me time to do my renovations and then flip the property. At the end sale, we're going to pay that loan off. So that's just a win. That's what I call a win, 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 win. All right, let's keep going. Owner financing. Some of these properties are owned free and clear. You know what? You can talk to a seller who you're going to buy it from. You're going to take this property off their hands. They own it free and clear. And you're going to say, look, what are your plans with these funds? When we close and I'm going to give you these funds, what are your plans? Like, do you know where you're going to invest it? You know what you're going to do with it? Because if you put it in the savings account, you're going to earn 0.0000001 of 1%. What if I can pay you 3 or 4%? Or 6% or 8%? again, if I could pay you 8% for a fixed term for 12 months, 24 months, whatever, and then we'll pay you off, we'll balloon. Now you have somebody who's making interest on an investment backed by the real estate. So that note is secured by the real estate. So they can be the bank. That is a great way to fund the deal where you don't have to go find a loan. Joint ventures, partnerships. Again, if you don't have the money to fund the deal, you can partner with somebody who does have the money. Hey, I have the deal, you have the money, let's partner and split the proceeds. It's a great way to fund deals. Let's pause right there. Let's see if we have any questions. Let's take some questions. I hope this is helpful. So yes, I love that too. So yeah, I hope this is helpful and hopefully explaining some of these different strategies. Let's keep going. Hiring the right contractor. You want an honest contractor who's going to be honest with you on the cost of repairs. You don't want someone who's just going to give you lowball numbers, but when it comes time to actually do the work, they're going to come with the real numbers. That's not helping anyone, right? Same with a realtor. You want a realtor like one that I know very well, who's going to give you the honest truth in the ARV and is not going to give you an inflated number that there's no way we could sell for, just so that you hire them. And then when you hire them, they're going to ask you to lower the price because the numbers they gave you weren't realistic. That's not what we were looking for. Fix and flip versus buy and hold. Do you want to flip it within 90 days, or is this a great area where you should hold on to the real estate for the long term and just let it cash flow? There's so many different investment strategies, and that's why it depends on what are you looking for. So with that, we'll take some questions. I hope this was helpful. Hi, Mireya. How's it going? She says it's extremely helpful. Thank you. We appreciate you. So yeah, hopefully that was helpful. We'll take any other questions with that. We're going to keep on going. That was a pretty good run right here. We're about 40 minutes, so I definitely want to keep these short and sweet. So with that, if you have any other questions, make sure you post them below. We'll keep you in tune. We're going to be back here same time tomorrow, 1 p.m. Central. And to all our viewers around the world, we appreciate you. Just know this, that you have greatness within you. And you can achieve anything if you put your mind to it. So I'm so happy to be here with you today. Thank you for spending the time with me. And as always, don't forget, you have greatness within you. I'm going to see you tomorrow, same time. Thank you.